Welcome to StockMarketFunding.com. One of the things that we're going to show you here is the famous VIX Market Volatility Index. It's a weekly chart, but I also feel the need to pull up another weekly chart on the S&P 500 so that you have a clear visuality of this is a fear indicator that is the back half of the S&P 500 index. As you all know in our other previous trades that we've done at StockMarketFunding.com is that we got plenty of trades and plenty of these video charts for you so that you could keep up with oneself. For the people in the school, what they're going to see is in the invert relationship. So basically, when I put the bottoms in, we had a big breakout. And we had a big breakdown in the S&P 500. Here, let's make it nice for you to see that we had a major breakdown in the S&P 500. And at the same time, at the very same time, buying the VIX calls to go higher was a thing to do. We got down here to 16. It's on our website. It's on Daily Stock Charts, Stock Market Funding, YouTube channel, whatever you want to do. Go back and find when we were shorting the S&P and going long here. When this goes down, that goes up. So since we put in the weekly low here, and we also got above that weekly down bar, and that's going to be the current support on the S&P at 1054, is that the lower this goes, the more complacency and the less fear will be in the market. And that would mean that if that goes lower, this is going to go higher. Now, notice that this is a weekly chart. VIX, CBOE. It's market volatility now. And understanding this relationship between the two as one goes down, one goes up. This is a double bottom here on the VIX where the breakout occurred. See that? And all the fear and the markets were selling off. Capitulation was in there. But now watch the bottom chart. Is that that's a 50-week moving average. Yeah, the 10-week is pointing down. That's bearish. But the support levels happen to be right here. And if we break higher here, just remember one thing. This was an extreme low down here, folks, and that was inevitable. And back before the reversal high in April and parts of May, later in May, we were telling everyone that, and we have the live trades we did. What a move. Let me tell you that basically, if I'm going to get, if this fear indicator, the VIX right here, this weekly, does not want, if this weekly gets back above the 200 week and it's 20 week and holds the 50 week at support but starts to laterally go up, then the failure of the S&P 500 right here is going to come down as far as the S&P 500 index. What it does tell us is that there is less fear in the marketplace right now, which supported this bottom down here on the S&P 500 index. And when there is low amounts of fear or complacency, that's when these things move higher up into their resistance levels on the S&P. They go higher, and this goes lower. And when bottoms put in when short-term bottoms, or even long-term bottoms, but particularly short-term bottoms are put in, you keep breaking down, and that means all you want to confirm here is that there isn't any fear in the market. And when there's no fear in the market, that's when they grind higher, because people would show up in the buying activity, would show up in the buy side. breakouts would be happening, stocks would be making higher highs, everything would be working the right way. Because the psychological sentiment is, oh, well, it's all behind us now, no worry. And this would come down in price based on that thinking pattern, folks. And that means that short-term price movements are good to trade long when there isn't any fear, because buyers are stepping in and they're buying the market. It's a little bit of a lagging indicator, but as far as the sentiment goes, is obviously when this breaks higher, more people that were real bearish don't become so bearish at low readings, because they don't. They become more bulls. And I'm just letting people know here that moving forward into next week, the last week of the month, is there going to be portfolio dressing? Is it sell this last week, move, and raise cash? We still got a week of earnings left. 3 weeks heavily loaded on the S&P earnings next week. Today's date, 7/24/2010. Time, 12:51 Pacific Standard Time, PM. We've been here all morning long working with our students and other people listening on the other system. Is that I like to get net short again when there's no fear. I always do. No fear, complacency, all the problems are over at these low levels. Nothing to worry about. Well, then look what happens. Bam there and bam there. So when I'm going to put a short on the S&P 500 index, like I did over here, part of it was based on that 16.17 reading, and I started shorting right into here. And I've got the live videos on stockmarketfunding.com. I've got the live videos on dailystockcharts.com. I've got the live entries. I've made the money all the way down. So your opinion is one thing, and I appreciate all opinions. But we don't work and make our decisions on opinions. What we do, though, is use our precise skills to make our decisions. And part of our decision process is that the reason why I'm not even trying to short the S&P 500 yet, that's this index, is because less people are scared. That means that supported that bottom where we went long the $1,020 call. We went long at one time, then we came back, and on the pullback we started buying a 1050 call as a secondary trade. And naturally, when the move got above half of that bar here, naturally we were buying calls when it didn't break the bottom, but we took our profits from the puts and let the calls run, sold them over here, buying back at the 1050 strike, and made another move. And if I don't continue to go higher there, then I will sell those. But the most important thing about this, folks, is the reason why I'm not taking a new short yet is because, number one, I've got to get this VIX back above the 200-week moving average on a consolidation. That means that this 10-week and 50-week moving average here in this last week's bar would go below there if this goes above higher there. And at that point in time, that's when I look at getting net short, as I've done all year, and long. It doesn't matter to me. But I'm not going to go in and short the index as long as this is going in this direction. But I will tell you, there will be a time that within this summer rally that this comes down in here, I'm an automatic buyer of the S&P 500, wherever it is on the upside. This comes down here, we're going way back up here. We got to take out that 1150. But the lower that I go, the more prone that I will buy, because the put options will be totally deflated on the index and I'm buying. There won't be no fear, nothing can go wrong. Then I'm buying the short at that time on the S&P. So you got the volatility index related to the S&P 500 index. One's a fear indicator, complacency indicator, and one is where the bulls are coming back to life, because when this goes down, bulls try to come in. Okay? So less bearish sentiment when this goes lower. The higher the bearish sentiment is, it peaks higher. No bears down in here, and all the bulls get crowded in up here, and SMF comes in and shorts the index down. It's a wonderful tool. We use it for lots of other different kinds of pair trades that we do based on bear funds, bull funds. Welcome to StockMarketFunding.com.